How do you choose how to allocate capital and allocate your energy and resources right now at Chevron?
Well, at Chevron, everything starts with our strategy, and our strategy is essentially with using our strengths to deliver the lower carbon energy the world needs today. From that, it's about essentially increasing the production the world needs of today's energy and building tomorrow. So for us, we would allocate part of our money towards the business of today and then building the business of tomorrow. And what that looks like for us, it starts with capital efficiency. So every dollar that we spend, we want that to be very, very efficient. And we've been able to do that in our conventional business by raising production, as well as by starting to build lower carbon businesses as well.
How important is Permian production to Chevron in executing that kind of strategy?
Well, for the United States, the Permian Basin is, quite frankly, a gift to the United States. It is, for us, by 2025, we'll have a million barrels of production. And it's a factory, so you get to continue to practice and get better.
Right.
And for us, it's one of four major growth assets in our portfolio. So we have the Permian, we have other shale and tight like that in Venezuela and Haynesville and other areas. And then we also have our deepwater Gulf of Mexico, and then our big project in Tengiz that comes online. But when you combine all those growth assets, for us that means in the next 5 years a 3% CAGR growth of production.
How do you figure out where to spend more time and energy? I mean, because you can make arguments either way. Like the Permian, the decline rate is really steep, right? So you have to keep going just to run in place. Gulf of Mexico or deep water is going to have a much longer lead time, be much more expensive. You have to have confidence in a longer term oil story to want to spend those billions of dollars. How do you, sitting in an office at Chevron, think about that?
Well, it's a portfolio, so you want to have a portfolio of options. I mentioned the four growth assets just a moment ago. You want to have a portfolio that allows you for projects that can continue and sustain. So the Permian, as an example, will kind of plateau at 1.2 million barrels per day and then hold steady for the foreseeable future. Our Tengiz portfolio will continue to stay at 1 million barrels by 2025 and hold for a bit before it starts to decline. So you want that and the deepwater Gulf of Mexico that tends to produce and then come off over time. And so it is building that all together to make sure that we can continue to grow both our production in a capital efficient way, but also our dividend, right? You have to grow the business to be able to continue to grow our dividend, which is one of our commitments.
Then add in the energy transition and obviously making strategic decisions in how you invest in it. How do you leverage Chevron's portfolio now to then help the energy transition? How do you make those connections?
It's an interesting question. The very first thing we want to do is we want to invest money to make sure that we're reducing the carbon intensity of our existing operations. So in this particular calendar year, we have $2 billion set aside for making our intensity go down on our assets of oil, gas, refineries, things like that. In fact, we've already reduced our oil assets in regard to intensity by 35%. So we're committed to reducing the carbon intensity of what we do today, at the same time leveraging our strengths for the lower carbon businesses. So we're the second largest bio-based diesel producer in the United States today, and we're the largest in the world. And then and it's because that can be used in today's equipment, today's trucks, today's planes, today's refineries and pipes and things like that. So that's one of the areas where we've grown quickly. And then we're building positions in carbon capture and sequestration as well as in hydrogen.
What is not appealing for Chevron?
Well, the things where we don't add value, right, quite frankly. And so think about wind and solar. There are a lot of companies. When you think of
value, is it return profile as value, or is it just it doesn't leverage anything that you already have?
Yeah, it's a connection of two things. One, we believe we have to bring something to the equation, have a capability or an asset that we can leverage. And in wind and solar, that's not our foundation, so to speak. So we'll leave that to the people. We'll partner with people that do that, but we don't need to do that.
Where do you stand then on things like hydrogen? Or that people say, oh, it's very similar to natural gas, for example, or like e-fuels or stuff like that, like things that are kind of close that you could use existing infrastructure. How do you think about allocating capital to that?
Well, so I think in an area like renewable fuels, if I could start there, that's one where you can use it in your equipment today. So you can tell that we've emphasized the majority of our $10 billion of capital before 2028 that we said that we were going to spend, the majority of that to date has been in renewable fuels because everybody can use it. Carbon capture and sequestration, we believe that's the next most logical thing, and we're investing heavily in that. In fact, there was an announcement this week where we added kind of 1 billion tons of storage space here in the Gulf Coast. Hydrogen comes next, and so today we're viewing hydrogen as something we can build in hubs over time. We are a large hydrogen producer today from our refining system. And the question over time is how do we make it cost competitive so that it can compete in the market? And we're committed to finding that out. We have a lot of tests going on today, but we'll be wise in our investment of capital there.
What is the biggest hindrance to taking on all of this for you? Is it labor? Is it costs? Is it policy? Is it infrastructure? Is it permitting? What's the thing that prevents you from executing the way you want to?
Well, I think
all those things.
Yeah, I think that there's two themes today that are pretty important. I think, well, maybe three. I think people forget the scale of the energy system. I mean, it is enormous, and people forget that with the 8 billion people in the world, that what would be an example? 20,000 nuclear plants. Mm-hmm. That's about the energy consumed per year in the world today. So this will take time. In fact, it took 40 years for oil to go from 1% of the energy mix to 10% of the energy mix. So we have to be consistently moving forward. I think the opportunity is to stay pragmatic and understand that, and then secondly, to make sure that we don't take any options off the table. That's an important message to governments in particular. Let the market compete in a lower carbon future, because we'll find the solutions. We've proven we can do it in the past.
Do you think that in the future, this transition will happen from mergers, acquisitions, that kind of thing, or is it going to be more organic investment and growth, or both?
Yeah, it's probably...
Are you going to go out and buy a small, cool, clean tech company, for example?
Well, I think the important part of the technology elements is it has to be scalable, because of that scale I mentioned a moment ago. This has to be large, right? With all this technology, and technology is a significant enabler. It has to go big. And so I believe it'll be a combination of all the things you described. An example for us, we did acquire Renewable Energy Group as part of our renewable fuels activity. We've been partnering in the hydrogen and CCUS space. And so I think when it's all said and done, you're going to find the companies with balance sheets as strong as ours, with the ability to execute, taking the steps that move forward. But it'll be pragmatic. It'll be logical steps.
What stands in your way, though? Is it government policy? Is it funding? Is it cost of capital?
Yeah, I think the rhetoric is what can slow us all down, right? So the reality is, if we want people focused on solutions, we need to let everybody be at the table and come up with solutions that we can work together. You don't want to exclude. If you exclude people, you can't leverage human ingenuity. If you don't let the market do it, you try to intervene and make somebody pick a winner or a loser. Let's leave that to the markets, because the markets have proven the ability to do that. I
was talking to somebody here earlier that said you need to develop a carbon market. If there's no carbon market and no carbon pricing, you can't get anything done. Do you agree with that? And how do we create that?
Well, so we've said for quite some time, if you start with the future of energy as lower carbon, the next thing that you would say is the best way to enable the market is to have a market-based, transparent price on carbon that considers life cycle emissions, meaning all of the emissions from a particular use. That's easy to talk about, harder to implement when you have multiple countries who are going to naturally be on a very different pace on the energy transition. So we'll continue to work with governments to find their way of getting as close to that as possible and see if we can provide solutions.
Do you think it's going to become here at the LME is a contract for carbon futures, and then we have a different price for the CME, and then one in Asia, like we do for, say, liquefied natural gas?
Well, there's a possibility of it getting that finite over time, but if you step back and believe that the world needs to focus on those three things that we often talk about, which is economic prosperity, energy security, and the environmental protection, when you put all those together, that might be a bridge that's further out.
Okay, but you don't need that to accelerate what you do, that's...
No, today we're leveraging our strengths, and I think you can see, when you think about what we've done today in lowering our existing intensity, growing our conventional production, returning money to shareholders, and being the second largest bio-based diesel producer, we believe we're doing it all. Now, we have to continue to do that.
Can you talk about just a second about biodiesel growth, biodiesel fuel growth? How does that grow? What do you think that market looks like?
Well, so for today, when we bought the Renewable Energy Group, we brought together our scientists and their scientists. And so what that does is it allows us to use our existing refineries, our existing infrastructure, to get lower carbon products to customers predominantly in the West Coast. Today, we sell quite a bit in the West Coast, some in Norway and some in Canada. Today, the growth for bio-based diesels, whether that's renewable diesel and biodiesel, has grown significantly in the US West Coast. And as customers determine their pace for decarbonization, we can be ready for them. So we're growing. We have a project going on in Louisiana, our Geismar project, that will be fully operational in late 2024, early 2025, that will add a significant capacity to the market today. So that's renewable diesel. In the future, we produce some sustainable aviation fuel today as well, and we look forward to finding the economics to make that work over time as well.
What's the return profile for this kind of stuff right now versus traditional oil and gas?
Yeah, but because we're so focused in policy-enabled markets, think about the U.S. West Coast today, renewable diesel competes very well with conventional diesel.
And my last question I'm asking everybody, and this kind of, maybe you just said it, what's going to power my car in 10 years?
In 10 years, I believe it will, the odds are, the majority of it will be hydrocarbon-based, and in some areas it'll be electric-based. And that electricity's power source could be many, many things, I think.
What kind of things?
Well, you can have coal-powered electricity, you can have wind-powered, you can have solar-powered. So I believe all those will continue to be a part of the mix in a decade. Our job is to make all of those things lower carbon and the things that we can add some value to.